Anisha, good afternoon. I think a fair bit of anticipation, especially given the commentary that we've been hearing out of the United States. So it'll be interesting to hear what the NASSCOM chief has to say.
Yes, I did ask him about growth as well as the visa issues. While he tried to make little of the visa issues, it is a niggling worry for IT companies because not just the cost involved, but even the certainty of project timelines gets somewhat impacted by the uncertainty regarding visas. Now, IT research firm Gartner has slashed its overall IT spending estimates for 2017 to 1.4% from 2.7% earlier, owing to the strengthening dollar. Now, how will India's technology sector fare when growth visibility doesn't look so bright? I spoke with R Chandrashekhar, the president at NASSCOM, and I asked him about Gartner's report. I asked him whether this will dim the growth outlook for Indian technology companies.
Yeah, you know, if you really look at the report that Gartner has come out with, then as far as the forecast for 2017 is concerned, the Gartner report indicates that IT services forecast holds steady at 4.6%, and for 2018 the forecast is around 4.7% in constant currency. So in other words, it's holding steady. That's what the forecast says. The second thing is the variations in terms of percentage in the reported currency, that is US dollars, are all therefore largely attributable to currency variations and currency fluctuations. Having said that, the other interesting aspect of the report is that it indicates that the CAGR over a 5-year period for the India outlook is 12.8%, which is a bit of a reduction from the 14.3% which was forecast in the last quarter of 2016. And while this is a bit of a lowering, again, if you look at on one side at the growth forecast for the next couple of years at 4.6%, this shows that the India value proposition is still strong and sound, and the growth rate of the industry and the services industry in India is still significantly outpacing the overall global growth rate, and it is above what we had projected in the NASSCOM McKinsey Perspective 2025 report of a long-term growth rate of around 11% in order to reach our goal of $225 billion by 2020 and $350 billion by 2025. So overall, I think what the report says is, I think it's fairly on expected lines, I would say.
The US government has recently changed the guidelines for processing of H-1B visas this year. In fact, the entire visa quota was taken up in just 4 straight days. Will this increase the cost for Indian IT firms that do send some employees for projects to the US?
No, undoubtedly, I think the signals and the messages coming from the US as far as the visas are concerned have not been positive. That's, I think, goes without saying. All the statements emanating and so on. But at the same time, there have not been any substantive changes in the overall, legislative or regulatory framework at this point. And even if the number of applications for visas has come down, the total number of visas being issued is still the same. So when you put all of these together, nothing has fundamentally changed at this point, notwithstanding the somewhat negative vibes that are coming out from the US. There are, as all of us are aware, much bigger underlying changes that are underway in terms of business models, in terms of the kind of value that the India service providers are being asked to provide to the client companies, which are having a profound impact on the nature of contracting, on the nature of the deliverables, on the pattern of risk sharing, on the pressure to build in innovation as a part of the offering, and so on. All of these are affecting the mix of people that they employ, the mix of on-site and off-site, the kind of skills required, more of domain knowledge, more of consulting experience, and so on. And all of these are bringing about changes. So it's the visa issue, I think, has to be seen in that broader context. And when you look at the magnitude of the changes which are being driven by the broader industry level changes that I was talking about, and the fact that we are talking here about 85,000 visas being issued by the US every year, new visas, out of which the Indian IT service companies account for less than 20,000, about 17,000 if I'm not mistaken. And that is against nearly 4 million people working in the industry. So let's not look at visas as the be-all and end-all of the entire industry's growth. There are much bigger things which are happening. And while visas are important, and while it is absolutely essential for the US, both in their own interest as well as in ensuring smooth business and working environment for the IT industry, it's important to ensure that the visa process is streamlined. That is not the sole determinant or even necessarily the most important determinant of the progression of the industry.
Right. So, visas may not impact the growth rate, but if firms have to hire more locally, doesn't their utilization dip? Because if you send somebody from India, once the project is done, you can call them back. But if you hire somebody locally, you're not going to fire them once the project is done. Won't the bench strength remain high and impact the margins for Indian IT companies?
No, undoubtedly, if qualified workers are available locally, and if local workers are hired, there could be a differential. But do bear in mind that this differential is not as significant as is being made out by many of the analysts. First and foremost, a lot of people are looking at $60,000 as the wage, which is actually only the minimum exempt wage. The actual wage being paid by the companies is much higher than that. Around 80 to 90,000 US dollars. So that is one aspect. And the second is if local people are hired, and if there is a slight increase in the wage in comparison to a worker on the visa, then that impact is perhaps going to be there to some extent on the margins. But as far as the work being done out of India is concerned, I don't think that is going to have a significant impact, because the root of the whole problem is that there is a lack of skilled workers in the US. And it's not as if people being sent from India are entry-level workers. In fact, typically they are people who do have some experience before they actually go to the US. I don't think any company is going to send an entry-level person directly to the US to work on projects. So I think all of these are factors which have to be kept in mind, and we have to see how the whole visa regulatory environment plays out in actual practice. And I think that is something that time will tell, and we'll have to wait and watch.
But doesn't the uncertainty on H-1B visa hit project deadlines? Will clients then consider companies like Accenture or Microsoft for these kind of projects over Indian IT companies? Could it impact the order intake for IT firms?
No, I don't think that there is a huge differential that way, because the availability of skilled workers in the US is the same for all the companies. The only question is, if the regulatory restrictions that are envisaged in the visa regime in the US are selectively applied to Indian companies and not to other companies, then to the extent that other companies are able to source skilled workers from India faster or at a different level, then it does alter the level playing field. And that has been the central point in our argument, that if these intended restrictions are for the purpose of protecting the American worker, then they should be applied across the board, and we have no problem if such protective measures are applied to all companies. But once they are applied to all companies, then the issue is the same irrespective of which company is doing the work. If the workers are available locally, they will be hired. If they are not available, they have to be brought in on a visa, and whatever is the efficiency or inefficiency in the visa regime would be the same for all. But companies have learned to manage excuse me, with the regime as it exists, and to build a sufficient buffer to be able to handle the business as it comes in.
Can you talk about the impact of the visa issues being faced by Indian IT companies in Singapore? There, I think it's a big deadlock.
I think Singapore issue is, in some senses, a more difficult barrier at the moment, in the sense that there has been practically a complete shutdown of the issue of new visas. Many companies had planned to address the near markets in ASEAN, for example, using Singapore as the base, as well as, of course, the Singapore market itself. And the fact that new visas are not being issued, even renewal of existing visas is not being done, certainly puts paid to many of those plans, and some companies have even started relocating and looking at other possible bases for the ASEAN region. So that is certainly a matter of great concern, and it also depends on how much is the mix between the workforce that is stationed there to address the Singapore market and other markets. All of these can be somewhat dynamic, can vary from company to company, but there is no doubt that the restrictions on the visa there have been a huge dampener, and in fact have pretty much become a showstopper for further growth.
So will this hit the APAC region growth for IT companies in 2017?
I don't think that the APAC business will be hit at all, because the companies would simply have to look at an alternative strategy for positioning their workers and look at alternative models for serving those markets. But the APAC opportunity as such is not going to either disappear or become unavailable for the Indian industry. It's just that the strategies and approaches will have to be different for those companies who had planned to do this out of a base in Singapore.